Good afternoon, everyone. I'm Dan Summers from Boundary Capital, and welcome to our webinar on how investors can participate in COP26. I'm recording the webinar as well, and there'll be an opportunity to ask questions. In fact, I invite you, please, to ask your questions. At the end, we always have a lively discussion and some questions that come in after the presentation. Okay, so I'm going to kick off with the thing here, and really it's all about your planet needs you, and it's really how particularly people in this country can invest in the outcomes of COP26, the implications of COP26, and really what it means for the private investment community, which we represent and are in part of the ecosystem. Okay, so this was a fascinating COP26, or COP as people know, and I think the world is still digesting some of the outcomes of it. And some people will be delighted, some not so delighted, some waiting and seeing. But wherever you stand there, there's been some very fundamental shifts that are playing out now after the close. So we're going to look at what the key goals were and how the strategies were set out to achieve it, what the role of the investor is, both public and obviously the private investors. We'll talk a bit about the UK. You can see the title and where we're coming from here, and also how we make a difference in the real world, and wrapping up, and then people's thoughts. So as most people know, just recapping on what COP26 was all about, the gathering of all the world leaders was really to look at two overall key goals, which there are obviously many others and many sub-goals. Getting to 1.5 degrees maximum and getting to net zero, obviously at the top of people's agendas, as well as preserving and conserving what we have, and trying to reverse some of the stages that of decline in ecosystems and habitats. So massive topics for us as a species, our planet, everyone knows that. And the question is really digging into how we were going to achieve that. And there were various themes, of course, and various actions. These actions all cost money. Where is this money going to come from? And this has been a sort of elephant in the room for many of the COPs. And this one was one of the first ones to try to actually put some materiality around that. So the mobilization of finance was announced to unlock, well, trillions was loosely used, but 100 billion in climate finance per year by the developing nations, and yeah, this statement of unlocking trillions in private capital as well, which is something that we'll talk about. Now, where is this magic money tree, and who's growing it, how people benefits, etc. And this was really Alok Sharma's statement: $7 trillion a year to meet the Paris Agreement, as well as the development goals. So this is no mean feat. So I just want to kind of take a step back, and while you digest these statements, really there's this kind of what we call the sustainable investments performance myth. The notion really is that for a long time there's been a perception of a trade-off between performance of social responsible investing and the amount of impact or good that it can do. And actually that's been changing anyway in the background of COP26 in the last few years. And you can see there's a Morgan Stanley quote, and there's the Global Impact Investing Network, otherwise known as GIN, not to be confused with anything else. And you can see there, if you can read the key themes, really is that they're qualitatively really saying the paradigm has shifted. And if I show that in more graphical form, you can see that in the last kind of few years, if you look at the benchmark, social responsible investing and non-SRI, you can actually see, although 2020 has not been a great year overall, SRI has performed better. And you can see that in the last 3 years to that, SRI's performed better. And before that, it was a mixed picture. So it is, two things are coming clear. Not only is SRI now, not only, if you like, good, but good business, good investment, and also it is changing. It is increasingly becoming the dominant form of investing, and that's delivering returns. And this is not really a coincidence. The world is moving, new markets, new opportunities, and people are also shutting the stable door on things they don't want to invest in because they don't want to, but also because those things are becoming economic. So this is all running alongside this private finance theme. And actually you can see these initiatives also alongside the sort of undercurrent of commerciality there, which is particularly in the UK, we would actually hold up as a leading light and say, we're doing a lot of things right. And the government is doing a lot of things right. You can see the green financing framework. You can see that there are real regulatory levers being put in place. And that's a broad initiative there that came out in June. There's the UK Infrastructure Bank, which has been set up to increase the investment in green and clean energy. And the EIS scheme, number 3, the Enterprise Investment Scheme, which has been around for a while and is particularly targeted, as people know, at the early stage of the market where disruptive businesses are by definition going to come from. And it's raised a not insignificant amount to date. Some might argue it's not enough, but 22 billion is still a number that's making a dent in the kind of businesses that are being born. And if we look at the kind of businesses that are being born, and particularly in the UK, it might surprise a lot of people to know that the UK really is. We are good at this. We are really, really good at this. In fact, the UK, and the study talks about London, but it's really the whole of the UK, is the fastest growing impact hub in the world. It is third in terms of size behind China and America. And that's over $1 billion of very clearly denoted impact venture capital into businesses. And you can see some facts and figures here. You know, it is a big deal. And if, for those of you who may not know, there's a few that are listed there. You've got the likes of Octopus Energy in terms of green, sustainable energy. You've got the likes of Arrival, which is making electric vans, electric buses, and it's also changing the way that vehicles are built, not gigafactories, but they call them microfactories as well, which is really changing the supply chain. We have British Volt, which is a massive investment. It's not listed here, but in a successful company in battery technology, and Babylon Health, which is AI health tech, not necessarily climate focused, but certainly impact. These are all unicorns. And for people, you know, these mean these are $1 billion valuations or more. And there are others that fall maybe just slightly outside of impact or arguably impact, but you know, this is a big deal. These have come about in the last few years, and there are more to come, and that's really the exciting things. And we're going to come on to that. At the same time, we now see that investors themselves, when in unsolicited polls, and this goes back a couple of years, but the themes have changed slightly, but I didn't have data enough to give a clear crystal view that was comparable, but they're much about the same. Investors are becoming more interested than ever before in impact themes across the board. In climate change, plastic reduction, you can see the ones that dominate there are the ones that are the big planetary alarm bells in terms of climate tech. So you know, investor awareness is coming to the fore as well. All these roads are kind of leading to Rome, so to speak. And what I want to do is to bring you kind of into some real businesses, potentially the ones of tomorrow. There obviously will be. There's high risk at this end, so there'll be some winners, there'll be some losers. But one thing's for clear is that impact investing doesn't need a leg up. The governments are doing their bit to unlock, but the governments are looking to us, the private investment world, to actually help them, give them a leg up. And as we've seen, actually, we're not doing anyone a favor. These are opportunities. So when we say that the planet needs you, yes, it needs you, but it's also an opportunity for investors. Thank you. We've all got some We've got some good questions coming in already. Keep them flooding in. I'm keeping a note of them, and we'll come to those at the end. I'll try and weave them in if they make if they're directly relevant, but otherwise I'll leave a bit more time, and we'll talk about them later. So what I want to do is to look at a couple of these businesses that directly relate to climate tech, so to speak. One of them is Echion Technologies, which is a university spin out from Cambridge, and it's really focused on materials science for batteries. And materials science traditionally has been high impact. Many people can think of materials out there that have changed the way things are done, graphene, etc. They take a very long time traditionally to make progress. Here, this one is speeding along in relative terms, and it makes a transformative difference to batteries. And of course, there's a huge pull on batteries in the marketplace for EVs and other forms of electrification around making them higher power density and making them last longer and making them greener in terms of the overall technology. And this technology is now being partnered. There are some corporate partners who are interested. There's been a huge investment. Boundary Capital, we actually invested in this business before, and since then it's had an uplift, and it's had investment from some big industry players in both transportation and battery technology. So it's going to the next level. And could this be one of the next unicorns? I'm not going to kind of give it the kiss of death by saying it will be. These are exemplary, but they're just giving you good examples of companies that are right in the space that are here. They're EIS-able, they're accessible through impact funds such as ourselves, or if you can find them yourselves. And another one here is another university spin-out called Zimpla, I think it's pronounced, apologies if not. But they are using natural alternatives, as you can see, to single-use plastics, a huge problem for climate change and environment, of course. And you can see that they have a mission to replace the single-use plastics everywhere. And they've had rounds of funding, few £1 million. They're doing very well. They're starting to get early traction, and it's all based from plant protein materials, natural plant protein materials. So these things you can imagine becoming every day. Some you would have heard of, some you wouldn't have. In fact, a lot of the unicorns, the big businesses tomorrow, may have brand names that you just, as a consumer, will not see. But COP26, the underlying trends, the markets that are developing, you think about the pledges, even the watered down or the allegedly watered down pledges to phase down coal. What's going to replace that? We have more people on this planet. We're going to need more energy. Where's that going to come from? How's it going to be green? It is an opportunity. It's an opportunity that's not going to go away. Let me just take a step, not backwards, but to the side, and just kind of put this in context. There are many ways to invest in sustainable or socially responsible investing, and we focus on impact. Of course, everyone here would have heard of ESG, and if you like, ESG is kind of like the compliance side of things in one level, how people are performing in terms of environmental, social, and governance factors inside their businesses. Impact is actually based on outcomes, of course. So this is how to transform the supply chain the businesses make. And of course, they can be both. And exclusion or screening is usually the sort of traditional, if you like, SRI of sin stocks, as they were called, which of course is a subjective notion. People have their different views, as of course they will, on what good and bad and moral companies are and practices. You can see it's a Venn diagram of the three sets, and there is some objectivity, some subjectivity, and we're focusing on impact. And the whole point of impact is not to say that the others aren't worthy or anything like that. We don't comment about that. This is all something that needs to make a difference. But if you want to move the needle, and particularly on the COP26, then the only one that can make that difference is impact by definition. So that's really why we're highlighting this as part of the theme of what we're talking about. And in terms of our own strategy, we're people on a mission ourselves. Of course, there are a number of impact funds. We're B2B tech investors, and we're passionate about driving change and disruption in a positive, impactful way. And we're now people like ourselves are adding criteria, strong criteria that rises above any sort of subjectivity. Everything we invest in, for example, has to have the capability to impact and enrich 100 million people's lives. So you can start to see that, you know, if people like us are out there, and if people like yourselves and the advisory community and investors also are investing for profit and for good, then this will add up, and there will be overlap. It won't be there will be the same million people who get impacted, but it adds up, and we can fulfill the COP26 goals by good investing, by just being consciously aware about the impact that it's delivering. And here is a bit of background for us as an example of a methodology, and we passionately believe that methodologies are the ways to measure and to ensure that impact is delivered. And we come up with something called equivalent lives impacted, the ELI, which is our scale of impact, which we've got defined elsewhere. Sorry, the 100 million lives, that's the number of people times the degree of impact as we define elsewhere, and the operating business of the actual risk itself. And we say to qualify for our investment, the ELI must be greater than 1 million. And other people might have their own things, but again, this ensures that we are moving the needle. Some people have carbon, amounts of CO2. Some people will have other things about biodiversity or some metrics. We wanted a unifying metric and to ensure that impact is delivered. So, you know, if we bring all these things together, what we now see is that COP26 is setting out a clearer vision than ever before in terms of what we need to do, the targets we need to reach, and also kind of for the first time, really, there's some proper things happening, particularly in the UK, I would say, some real initiatives being made by governments to put frameworks in place, and the world is catching up in terms of private sector understanding and seeing the returns that SRI can bring, and that's driving new investment, good marketing, good markets developing that are rich for investment. And you can see the financial terms are as good or better for impact. So in conclusion, this would be our way of saying how you can do your bit for the planet in an impact way. And it's not a charitable act necessarily, it's an opportunity as well. So that's the thoughts for you. I'm sure you'll have a lot of ideas at your end, and I've got some good questions coming in. So what I'm going to do is just have a look at them. We do sometimes open up the mic, but it can sometimes get lively. So in the time that we have available, I'm just going to take these questions. So the first one here is, how has the pandemic affected the early stage technology ecosystem? Has it killed growth? That's one question. So over the past 18 months, there's been clearly some disruption along the investment and the early stage technology company supply chain. If anything, we've seen more attention. We've seen COVID bringing more attention to this market. More people understand why unicorns can get born, particularly because we've seen some very large vaccine companies and supply chains change, and lots of companies along the way become wealthy very quickly from doing good, being kind of forced to do good. And this is a sort of short-term thing. On the other hand, there's a surfeit of capital that has not found homes because a lot of the investments have been disrupted. One might argue that the stock market is not necessarily a great place to put money at the moment anyway. And the restrictions that we faced in terms of all getting out have highlighted and just amplified the overall need. So I would say that much as no one would want a pandemic like this, it's one more disaster and one more crisis in an ever increasing cycle of crises. And if we all look at the big picture, it is only going to get more and more prevalent. And certainly from our point of view, we don't wish to sort of sound like we are profiting from people's misery. That's certainly not the way we see it. What we see is that these things highlight the necessity to take impact seriously and to invest in the things that are going to make a difference as the world and these things become more in everyone's conscious. So thanks very much for that. We have another question here. There are 17 UN SDGs and lots of different ESG issues that people care about. Diversity, poverty, plastics, which was the highest on the chart, climate change. How do we decide, and that's boundary presumably, which impact areas to focus on and why? Okay, thank you very much. That's a great question. So yeah, this is kind of, impact. We can only do so much, and we have to be focused around what we're good at. And from a boundaries perspective, we looked at the UN's SDGs. In our view, these are for governments, these are not for companies. When we hear people saying they're investing in the SDGs, that's okay. We had the opportunity to put some rigor and some frameworks around that with a blank sheet, as well as with our B2B investment background. And we narrowed it down to 6 themes that we knew that or believed that were business focused, that businesses could make a difference, private investment could make a difference, and also played to our strengths, our broad strengths in B2B technology and in the early stages as well. So that was the way we saw it, both on the supply and demand side. And we invite anyone to look and scrutinize our record and our methodology alongside the other impact and SRI funds that they are looking at, and clearly to to view those as much as the financial returns, and keep those challenges and questions coming. Behind the question, I'd love to discuss more perhaps later what you think should be the themes, how you think they should be addressed, and whether there's overlap with the answer that I've given. So thank you very much for that. The government is supporting green investment. Could that change? Okay, very good question. So we saw something called the Green Framework. I always get this wrong, so apologies for that. Green Financing Framework, where the UK was committed really to putting permanent regulatory supports in place. And I think one sort of might look at this and say, well, with EIS, what happens if they changed? Or with tax breaks, what if they changed? Or the government is now allocating big pots of money, and those pots of money are they're there. They do have some strings attached, of course they do. They have to be in the right areas. But this government is committed. In my view, it's made a long-term commitments in quite a detailed fashion, and compared to expectations as well as other governments. So my view and our view is that those regulatory supports are there to stay. But I would also answer it that the overwhelming private markets that are not dependent on regulation are there. We've seen the data, we've seen the evidence, the returns are there, the investment is there. The investment's growing by double digits every year in terms of SRI investments compared to non-SRI investments. So I would argue that the frameworks are there, but actually even without them, the opportunities are not going to go away. But thanks for that. Couple more questions at the end. Are you seeing opportunities in green tech? So we are seeing. So are we seeing opportunities in green tech? I think yes, broadly, yeah, absolutely. So we don't sit back on our heels for this. We lean forward. We're out there trying to engage with the community that we see are developing these, from universities to hubs to the various funds and competitions that the government launches in all areas, from green hydrogen to the future of flight, to changes in the energy supply chain, to environmental and food and farming supply chains. There are many competitions that get run by the government. There's many pots of money, there's many sources of academic excellence, And of course, you can't keep entrepreneurs down. You know, the entrepreneurs of tomorrow, I'll mess up the quotes from Bill Gates. I don't have it in front of me, but he said that the entrepreneurs now of tomorrow, the unicorns for tomorrow, are going to be effectively impact companies that are going to make a difference, because that's what people and younger people or hungry entrepreneurial people are waking up in the morning and wanting to deliver, to put their passions as well as their future passions and pensions, how about that, into the opportunities that they see that are aligned going forward. So there is no shortage of green opportunities. There's still a lot of stuff we have to sift through, as we always did, and as any fund has to do. We sift through hundreds and hundreds of opportunities a year, and many of them we don't believe have got the same profile for success as others. There's still a lot of risk in early stage technology investing, but we look out for the ones that have what we believe are the formula for success, and which fulfill our impact criteria. And there are just many people, and particularly in the UK, it's a great source of opportunity. And of course, it comes with EIS in many cases, with EIS benefits as well. So no shortage there. Okay. All right, there's a couple more that are sort of repeated. So look, thank you very much for your questions and your interest. I'm available, and we're always here to discuss this topic. This is CPD, so continuous performance development. Got that wrong, didn't I? Professional development in terms of the seminar and the topics that we cover. We're always happy to talk to any investors and share some of our own primary research, some of the research that we collate together, and also discuss some of the frameworks that we've helped investors to develop, and that we also understand from investors and also advisors in the space. The discussion has to continue. This market has to mature even more, and everyone is invited to get stuck in, get involved, and fulfill financially what we need to do, and also some other perhaps bigger, deeper and wider, more important objectives as well. Well, thank you very much. I'm Dan Summers, and please contact me if you want to discuss further.